Trading is closed. Let's look at the flows. This is Vector Daily. Today, the VIX stands at 16.09, pointing to a tranquil market environment with low volatility and a risk-on sentiment prevailing among investors. However, the calm may be deceptive, as the narrow breadth signal hints at underlying fragility. In the macro landscape, the S&P 500 index nudged up by 0.03%, closing at 6,915.61, reflecting a tepid yet positive trajectory. Meanwhile, the 10-year Treasury yield remains stable at 4.24%, suggesting steady interest rate expectations. The US dollar index, or DXY, remains relatively steady, not significantly impacting today's equity flows. Sector rotation was evident today, with materials, represented by ticker XLB, leading with a 0.91% gain. This suggests an investor shift towards cyclicals, possibly driven by growth hopes. Conversely, financials, ticker XLF, underperformed, dropping by 1.38%, likely due to concerns over potential rate impacts or sector-specific hurdles. Overall, sector performance was mixed, indicating selective risk-taking. Analysis of the Magnificent Seven reveals a varied performance. Microsoft surged by 3.28%, and Meta followed with a 1.72% rise, likely buoyed by favorable earnings or strategic developments. In contrast, Apple and Alphabet faced declines, down 0.12 and 0.79% respectively, suggesting potential profit-taking or company-specific challenges. Notably, Microsoft's trading volume was elevated, highlighting strong investor interest. In today's outlier analysis, ServiceNow emerged as the top gainer, advancing 3.54% to close at $133.11, driven possibly by robust growth outlooks or strategic initiatives. Conversely, Intel was the session's top loser, plummeting 17.03% to $45.07, likely affected by disappointing earnings or sector-specific headwinds. Looking ahead, for the S&P 500 ETF, technical levels to watch include a pivot at 689.12, with resistance at 691.07 and support at 687.28. As we move forward, investors should remain vigilant of sector rotations and individual stock performance, especially given the current narrow breadth of market participation.